You know the name iRobot. For years, Roomba was the word for a robot vacuum in the same way Kleenex means tissue. They basically invented the market, selling over 40 million units and hitting a peak valuation of almost $3.5 billion. But as of this week, the company is officially bankrupt. How does a company that created an entire industry and put a robot in millions of homes fail this spectacularly? To understand the collapse, you have to look at the years of brutal competition, the trade wars that drained their cash, and a massive regulatory decision that effectively ended them for good. The iRobot story actually starts way back in 1990, long before anyone was worried about automated floor cleaning. Its founders, Rodney Brooks, Colin Angle, and Helen Greiner, came straight out of MIT with a vision to make practical robots a reality. At first, those robots weren't cleaning floors. They were built for exploration and defense, tackling high-stakes projects for NASA and the military. Their PackBot became a legend in the field. It was used in search and rescue at Ground Zero after 9/11, and was later used extensively by US forces for bomb disposal in conflict zones. That early work built iRobot a reputation of world-class life-saving engineering. Then in 2002, iRobot pivoted from the battlefield to the living room with the launch of Roomba. Before we continue, please do me a favor and like and subscribe if you can, especially if you like learning about business. Let's get back to the video. It wasn't the first idea for a robot vacuum, but it was the first one that actually worked and captured the public's imagination. It was an instant sensation. By 2004, they had already sold 1 million of them. The Roomba became a cultural icon, part pet, part viral video star, and a true household name. There's a good chance if you lived in the States, you've probably had one at some point. The success was so explosive that after just 3 years, iRobot went public on the NASDAQ, raising over $100 million and creating an entirely new category in consumer electronics. Riding the high of its IPO, iRobot moved to cement its dominance. They didn't just stick to vacuums, they expanded their product line by acquiring Evolution Robotics in 2012. This brought in the Mint floor mopping technology, which they rebranded as the Brava. They didn't want to be a simple robotic vacuum company anymore, they wanted to be a general-purpose home robotics company. The sales numbers were staggering. By 2017, iRobot had sold over 20 million home robots. By 2021, that number had doubled to over 40 million. That same year, the company hit its peak revenue of nearly $1.6 billion, partly fueled by the pandemic-driven obsession with home automation and partly because of the excessive spending during that time period. At that moment, iRobot was the undisputed king of the category it invented. The downfall wasn't caused by one single mistake, but a perfect storm of competition and economic pressure that the company couldn't outrun. The biggest factor was the relentless onslaught of new rivals. For years, iRobot had a near monopoly, but the market they pretty much created eventually became a giant target. Chinese competitors like Roborock and Ecovacs flooded the market with alternatives that were often cheaper and had brand new features. They offered premium tech like advanced LiDAR navigation and self-emptying docks at prices iRobot just couldn't match. To defend its market share, iRobot was forced into a price war, but that eroded the profit margins that funded their research. The numbers tell the story. iRobot's once commanding market share took a catastrophic hit, falling from a majority position to well under half. This was made worse by outside forces. US tariffs on goods from China and later from Vietnam, where iRobot had moved their production, hit the company hard. A 46% levy on Vietnamese imports added an estimated $23 million to their cost in 2025 alone. Throw in post-pandemic supply chain chaos and a 24% annual drop in revenue over the last 3 years, and you had the perfect recipe for disaster. The company was bleeding serious money, reporting an operating loss of roughly $149 million leading up to its collapse. In 2022, iRobot was in deep trouble, but a lifeline appeared, Amazon. The tech giant offered $1.7 billion to buy the company. For iRobot, this was the ultimate escape hatch. It meant a huge cash infusion and access to Amazon's massive scale. It was a chance to pay off the debt and finally get the firepower to fight back against the low-cost competitors. But the deal never happened. It was killed by regulators. Both the European Commission and the US FTC, led by Lina Khan, raised major antitrust concerns. They worried that Amazon would unfairly promote Roomba on its marketplace and bury rivals. Even though the UK approved the deal, Amazon and iRobot couldn't find a way forward with the EU, and in January 2024, the deal was officially called off. The fallout was immediate and catastrophic. Amazon paid iRobot a $94 million termination fee, but that was a drop in the bucket. A big chunk of that fee immediately went to paying down a $200 million loan iRobot had taken out just to stay afloat while waiting for the deal. Co-founder Colin Angle resigned, and the company laid off 31% of its staff. Critics of the decision argued that regulators, in their focus on Amazon getting bigger, missed the real threat iRobot was facing. By blocking the deal, they hadn't saved competition, they'd effectively signed the death warrant for an American robotics pioneer and handed it over to China. Without the Amazon deal, iRobot was on its own, buried in debt with a business model that was fundamentally broken. By late 2025, the company's cash reserves had dropped to less than $25 million, and they had warned investors there was substantial doubt whether they could stay afloat. And then, on Sunday, December 14th, 2025, iRobot officially filed for Chapter 11 bankruptcy. But this wasn't a typical liquidation. As part of a pre-packaged deal, iRobot announced it would be acquired by its own primary manufacturer and largest creditor, a Chinese company named Shenzhen Passia Robotics. Sorry if I said that wrong. The same manufacturer that built the robots and held the debt would now own the entire company. Under the agreement, iRobot would be taken private. Its stock, which once traded at over $125 a share, would be delisted from NASDAQ, wiping out all its shareholders. For customers, the company says Roomba apps and support will continue without disruption. The new owners aim to merge iRobot's brand with Passair's manufacturing power. iRobot's collapse was a tragedy in 3 acts. They were victims of their own success, proving the market was so profitable that competitors couldn't stay away. They were outmaneuvered by faster rivals who sold for less. And finally, when a lifeline appears, it was snatched away by regulators who, depending on how you see it, either protected the market or sealed the fate of an innovator. At the end of the day, it may have been better for the end consumer for it to be blocked, as they now have many options for home robots at a fraction of the price. However, you could argue that with Amazon's resources, iRobot could have innovated, lowered prices, and provided more value than ever to the end consumer. The irony is hard to ignore. A company brought to its knees by Chinese competition, blocked from being saved by an American tech giant of monopoly fears, is now owned by a Chinese manufacturing giant. It's a lesson in modern business. Innovation gets you in the game, but scale and geopolitics and even luck decide who wins. That merger likely wouldn't have been blocked if it happened a few years before or after, and there were different people in office. The pioneer of home robotics isn't dead, but its independence is gone. Its legacy is now in the hands of its former supplier. What do you think? Did regulators make a massive mistake, or was iRobot doomed from the start? If you found this video informative and want to stay up to date, don't forget to like and subscribe, and until next time, see ya.